Hey, welcome back. So, Bitcoin just dropped 3% in a single day, and the reason has nothing to do with crypto. It has everything to do with the US bond market. And I want to explain exactly what happened because if you don't understand this, you won't understand what's coming next for Bitcoin. Bitcoin is at $77,015. This is actually a critical moment on the chart. Let me show you why. And by the way, there's a counter signal from strategy that I want to show you as well because it directly affects Bitcoin supply this week. So please stay with me. Here's a chart. Bitcoin at $77,015. Two key lines to focus on. Above us, the 200-day EMA at 81K. That's the average price over the last 200 days. It was our ceiling before this drop. We need to reclaim it, by the way. Below us, the 76,000 level. This is where Bitcoin is trading at a discount on Coinbase compared to other exchanges. When Bitcoin trades cheaper on Coinbase specifically, it signals US buyers are stepping back. That level is the key support right now. Now the RSI, two time frames matter here. On the daily chart, RSI is around 45 to 58. RSI measures momentum from 0 to 100. Above 70 is overbought, below 30 is oversold. At 45 to 58, we're slightly below neutral. Momentum is cooling, not crashed, just cooling. But on the weekly chart, RSI is at 38 to 45. The weekly RSI approaching oversold territory on a higher time frame is historically where buyers start stepping in. Not immediately, but this is the zone where bottoms form over the following weeks. And the Bollinger Bands. These are bands that expand and contract around price based on volatility. Price is near the lower band right now. When price touches the lower Bollinger Band after a sharp move down, it often signals the selling is getting stretched. MVRV at 0.77, still below 1, still historically undervalued. The 200-week EMA at 68K is the long-term floor, well below us. Why did Bitcoin drop 3% yesterday? The answer is in the bond market, and I want to explain it simply because it directly affects what happens to Bitcoin next. Real quick, by the way, if you want to trade levels like this, I use Bitunix, no KYC, deposit takes like 2 minutes, link is in the description and pinned in the comments. Get set up before the next move, by the way. Here's what happened, and I will keep it simple. The US 10-year Treasury yield just crossed above 4.55% for the first time since May 2025. Let me explain what that means in plain English. The US government borrows money by selling bonds. Investors buy those bonds and receive interest called the yield. When investors get nervous about holding US government debt, they demand higher interest to compensate for the risk. So yields go up. When yields go up, borrowing gets more expensive for everyone. Mortgages, car loans, business debt. And when borrowing gets expensive, people stop spending. Growth slows and investors move out of risky assets like Bitcoin and stocks into safer ones. The Kobeissi ladder, one of the most widely followed macro accounts in finance, said this week that the bond market is now unsustainable. Here's the part that really matters for Bitcoin. The market is now pricing a 60% probability that the Fed's next move is a rate hike, not a cut. A week ago, the base case was a cut. That has completely flipped. This is the same yield level that forced Trump to post tariffs on China in April 2025. Back then, the bond market was collapsing and the administration blinked. The Kobeissi ladder is saying we are back at that same level, and they are calling it a bond market crisis. For Bitcoin, this means the macro headwind is back. Rate cuts were the big catalyst people were expecting. A rate hike instead would delay the bull case significantly. But here's the counter signal, and it's a big one. Strategy just hit a record that changes the supply picture for this week completely. Here's the other side of the story. Strategy's STRC, their preferred stock used to fund Bitcoin purchases, just hit a record $1.53 billion in daily trading volume on Thursday. Saylor posted all-time high volume himself. Let me explain quickly what this means. STRC pays investors an 11.5% annual dividend without diluting existing shareholders. In a world where bond yields are at 4.55% and junk bonds pay under 7% and 11.5% yield from a company backed by 818,000 Bitcoin is extremely attractive. Money keeps flowing into STRC, and when STRC attracts capital, Strategy uses it to buy Bitcoin. From Thursday's volume alone, Strategy could theoretically raise $735 million. That translates to buying power for approximately 9,066 Bitcoin. To put that in context, that is entire weekly Bitcoin mining output of the entire network. One company, 1 day's trading volume, enough to buy everything miners produce in a week. Strategy has now bought 56,770 Bitcoin since since April and 101,147 Bitcoin since March. Their average purchase price is $75,543. At $77,015, they are currently slightly in profit on their position. So here's the tension. The bond market is creating macro headwinds that push Bitcoin down. Strategy is creating structural buying demand that pushes Bitcoin up. Those two forces are fighting each other right now at $77,015. So here's exactly where I stand and what the chart tells me to do next. And by the way, before my take, Bitunix is where I trade. No KYC, fast deposit, link in the description and pinned in the comments. Get founded now before the next move. And here's where I stand. The bond market situation is real. A 60% probability of a rate hike is not something I can ignore. If that plays out, the bull case gets pushed back. And Bitcoin losing 76,000 support would open the door to 73,000. But the weekly RSI at 38 to 45 approaching oversold, the Bollinger Band lower boundary being touched, MVRV at 0.77 still undervalued, strategy buying the equivalent of the entire weekly mining output this week. These are not signals of a market that is structurally broken. My plan, 76,000 holds as support. I hold my position and watch for a reclaim of the 200-day EMA at 81,000. That is the signal that the bond market fear has been absorbed. If 76,000 breaks, I add at 73,000 to 74,000. That is my next support zone and the demand zone on the chart. The weekly RSI has only been this low 3 times in Bitcoin's history outside of the bull bear markets. Each time it recovered within 4 to 6 weeks. Base case, on the other hand, bond yields stabilize as TRC buying absorbs the sell pressure. 76k holds, Bitcoin reclaims 81k, then pushes to 85k. Risk case, bond crisis deepens, rate hike expectations grow, 76k breaks, I add at 73k to 74k. The line right now, 76,000, hold it or we go lower. Let me know what you think in the comments, by the way. Thank you so much for watching and I will talk to you guys in the next video.